Now let's take a look at this year's medical plan options. Your first option is the PPO medical option. This is the same traditional PPO plan which you have been used to over the years. The annual deductible has remained at $500 for individual and $1,500 for family, in-network. Out-of-network is $750 and $2,250. Doctor's office visits is a $30 copay. Preventive care is covered at 100% as long as you stay in the network. Inpatient hospital is subject to the deductible and coinsurance. The coinsurance is 80%. The out-of-pocket maximum has been increased this year from $2,500 to $3,000 for an individual. But remember, copays accumulate toward that out-of-pocket maximum this year. The family out-of-pocket maximum is $6,000. Emergency room, there's a copayment visit of $75. It's waived if you're admitted, and then an 80% copayment afterwards. For urgent care, there's a $50 copayment as long as you're in network. If you're out of network, the deductible and coinsurance will apply. Let's take a look at the premiums for the PPO plan. As you'll note, by tier, the employee premium per paycheck is listed as follows. Employee only, $49.50. Employee plus one is $120. Employee plus family, $172.50. However, you can significantly reduce this per paycheck amount by participating in the various incentive programs offered. For instance, if you're a tobacco user and engaged in a cessation program, or a non-tobacco user and completed the affidavit, your rates will go down as indicated. Additionally, if you've completed the HRA and biometric screening, you can receive the wellness incentive. Each one can operate on its own and the premiums are indicated accordingly. You can combine the two, and the far right column shows what those rates would be for both non-tobacco and the wellness incentive deducted from that amount. The second option is a high deductible health plan with a health savings account option. Since this is the first time we're offering this type of plan, we will give a deeper overview of how this type of plan works. It consists of two parts, a high deductible health plan and a health savings account. In this case, the standalone health coverage, high deductible, is a $2,000 deductible for individual and $4,000 for family. Keep in mind the family deductible is aggregated, so the accumulation of each individual counts toward the $4,000. This is a qualified health plan. Also, preventive expenses are covered at 100% and are not subject to the deductible. Preventive prescriptions are covered at 100% and not subject to the deductible as well. Note, however, if your drug is not considered a maintenance drug by CVS/Caremark, you will pay the full discounted price until your deductible is met. All other medical services, including office visits, prescriptions, apply toward the deductible and out-of-pocket maximum at a discounted rate. The other half is the health savings account, otherwise known as a medical IRA. This account is owned by you, not the company. Contributions to a health savings account can be made by both the employer and the employee, and employee contributions are tax deductible. Earnings grow tax-free as well, and any distributions paid through this account are tax-free. Expenses are covered as long as it's an IRS Section 213D eligible expense. Remember, at the end of the year when you file your taxes, there's an additional form that has to be filled out along with your regular taxes. This form is Form 8889, and your CPA can help, or your tax advisor can help with this information. Remember, you cannot participate in a health savings account if you're Medicare eligible, age 65 plus, or covered under a non-qualified health plan. Remember, a health savings account is not a flexible spending account. This money rolls over from year to year, and it's not a use it or lose it proposition. In addition, in the event that you leave your employer, this money is portable and goes with you. Now let's talk about how a high-deductible health plan with a health savings account works. First of all, Canal Barge Company will set up checking accounts for employees through HSA Bank. This checking account will be owned by the employee. Canal Barge, Illinois Marine Towing, and Canal Terminal will contribute $500 for single coverage and $1,000 for family coverage into this checking account. Additionally, employees can set aside their own contribution from their paychecks into this checking account on a pre-tax basis. Then, when needed, employees can use the HSA debit card to pay for health-related expenses from this account. You use this debit card for only medical-related expenses, and it's used just like an ordinary debit card. As the owner of this debit account, the employee is responsible for using the card on appropriate expenses only. Let's take a look at how a claim is processed under this account. You continue to access the UnitedHealthcare Choice Option Network, the same network that consists of the PPO. Claims will be processed through UMR as they normally are. There are no co-payments for network office visits because all accumulates toward your deductible. You will pay a discounted cost for that office visit. The physician will then submit a claim as normal. The amount will be applied to your calendar year deductible and out-of-pocket maximum. There are no co-payments for prescription drugs, as the cost of these drugs goes straight toward your deductible and out-of-pocket maximum. However, maintenance and preventive medications will be paid at 100%. Examples of this are cholesterol, high blood pressure, diabetic supplies, insulins, and non-insulins. You will be responsible for the full cost of non-preventive medication, which means it applies toward the deductible and the max out-of-pocket. Claims will simply be submitted to UMR to apply toward that deductible and out-of-pocket. Remember, if you are contributing to an HSA or you have funds available from the employer in your HSA account, the available amount can be used as payment for these services. Let's take a look at the grid to show the health savings account information along with the deductible. You will note on the left-hand column that preventive care is covered at 100%. The health savings account for employee only, the employer is contributing $500. For family coverage, the employer is contributing $1,000. The deductible is a $2,000 deductible, employee only, and $4,000 aggregated family deductible. The coinsurance beyond the deductible is 80% in-network, 50% out-of-network, accumulating to a maximum out-of-pocket of $4,000 in-network or $8,000 out-of-network. The family coverage is shown accordingly. Remember, your out-of-pocket maximum, including the employer contribution, is $3,500 and $7,000 family. This is because the $4,000 is thereby reduced by $500 for the employer contribution, and the family deductible of $8,000 is reduced by the $1,000 employer contribution. Prescription drug expenses will also apply to the deductible and maximum out-of-pocket. Let's look at a couple of rules on HSA contributions. The maximum combined employer and employee amount that can be contributed annually to an HSA account in 2014 is shown below. For employee-only coverage, it's $3,300, which consists of $500 from the employer and $2,800 max from the employee. For family coverage, the maximum contribution is $6,550. The breakdown is $1,000 from the employer and then $5,550 maximum from the employee. Remember, you're not eligible to participate if you're eligible for Medicare or another health plan. The premiums for the high deductible health plan are shown below. The red column shows the per paycheck amount for employee only is $38.50, employee plus one $99.50, employee plus family $141 per paycheck. However, the same incentives apply for the high deductible health plan option. So, for non-tobacco users, the rates are significantly reduced. In addition, if you've completed the health risk assessment and biometric screening, they're further reduced. And then combined with both incentives, it's reduced even further. For more information, contact Human Resources or email us at benefits@canalbarge.com.